Hey, welcome to The Explainer. So right now, all the headlines are screaming about empty office towers and a crisis in commercial real estate. But you know what? That's only half the story. Behind the scenes, something much bigger is happening, a massive, multi-trillion-dollar great rotation of capital. Today, we're going to follow that money. We're going to see where it's flowing from, the old world of office buildings, and where it's rushing to, the brand new gold rush in AI infrastructure.
All right, so here's our roadmap. We've got 5 key stops on this journey. First up, we'll dig into the collapse of that old office world. Then, we'll pivot to the absolute boom in new AI infrastructure. After that, we'll look at what's actually fueling this incredible shift. From there, we'll map out an investment playbook, and we'll wrap it all up with a really important question. Is this a smart, calculated rotation, or are we just creating a whole new bubble? Let's get into it.
Okay, let's start with a story that probably feels pretty familiar to a lot of us, but its consequences are, well, they're still just beginning to unfold. We're talking about the great emptying of the American office. Yeah, see, this crisis in commercial real estate didn't just pop up overnight. The pandemic was kind of the final knockout punch, but the industry was already on the ropes. As this quote points out, it was already fragile. This was a disaster years in the making, and the huge shift to remote work just ripped the Band-Aid off and exposed some really deep underlying weaknesses.
And this number, this is the brutal result, 17.7%. Just think about that. Nearly 1/5 of all office space in the entire United States is just sitting there, vacant. Now, this isn't just some headache for landlords, okay? This is a ticking time bomb for the entire financial system, for the banks and the lenders who financed all of these now empty buildings with trillions of dollars in loans.
And if you want a perfect symbol for this whole mess, just look at the story of WeWork. I mean, it's the entire sector's collapse in miniature. It went from the superstar, a $40 billion unicorn, to going public for just a fraction of that. And then, and this is the killer part, just 6 months after they went public, the Federal Reserve started jacking up interest rates. Their whole business model, built on cheap debt and locking in long-term leases, just completely shattered. The result? The stock collapsed 99%. Investor money, just gone, vaporized.
But here's where the story gets really interesting. As that old world of office parks and gleaming downtown towers starts to crumble, a whole new industrial revolution is being built at a mind-blowing speed. And this is exactly where all that money is going.
You see, the most important thing to get here is that capital never really disappears. It just rotates. The money that used to get poured into office parks and sprawling warehouses, it's now funding the literal physical backbone of the AI revolution. We're talking about massive data centers, incredibly sophisticated liquid-to-chip cooling systems, high-density fiber optics, and the custom-made silicon chips that make everything possible. It's a whole new world. And this new infrastructure is way more complex than just building a few server farms out in the desert. It's really this 3-tiered system. You've got the giant cloud data centers that do the heavy lifting, training these massive AI models. Then you have smaller on-premise centers that companies use to run those models securely and more efficiently. And finally, you have what's called edge computing, which processes data instantly on devices like your phone or your car. And here's the kicker, each one of these tiers requires its own unique and very, very expensive physical build-out.
So you might be asking, what in the world is fueling this multi-trillion-dollar construction project? Well, it's being powered by 2 massive engines, an absolutely insane demand for energy and a huge surge of strategic government investment.
First, let's talk power. The amount of electricity needed here is just staggering. It's astronomical. I mean, when a software giant like Microsoft starts seriously looking into firing up its own nuclear power plants, you know the demand isn't just high, it's fundamentally altering our energy grid. Tech companies are literally being forced to become energy companies just to keep the lights on for the AI revolution.
The second engine here is government policy. Governments, especially in the US, are now directly subsidizing this entire build-out. Things like the CHIPS Act are funneling billions upon billions of public dollars straight into domestic semiconductor manufacturing. Now, this isn't just a simple subsidy, it's a full-blown strategic industrial policy. The whole point is to make sure the physical hardware that powers our future is built right here at home. Okay, so all this brings us to a really critical question, right? How do you even start to wrap your head around this new landscape from an investment perspective? Before we jump into any new strategies, we have to talk about a classic tool, the cap rate. It's a simple but really powerful ratio. You just take a property's annual income, after you've paid all the expenses, and you divide it by what the property is worth today. What that number gives you is the potential return on your investment. It's how you can compare, say, an office building in Dallas to a new data center in Virginia on a true apples-to-apples basis. It's a fundamental metric.
So while the cap rate is great for valuing one property versus another, we need a much broader strategy to play in this whole new world. I mean, sure, everyone's laser-focused on the big chip stocks like NVIDIA, right? But the real, maybe overlooked opportunity could be in the physical stuff that supports them all. So the question becomes, how do you actually invest in the guts of the AI revolution?
A really smart way to think about this is the picks and shovels strategy. You know, back in the gold rush, the people who made the most reliable fortunes weren't always the ones digging for gold. It was the people selling the picks, the shovels, and the pans. Same idea here. Instead of betting on one AI gold miner, you invest in the essential tools that all of them need to even be in the game. This could mean diversifying with ETFs for broad exposure, or you could get really surgical and target the key companies in these critical niches. We're talking about thermal management companies like Vertiv that literally keep these supercomputers from melting, or the networking firms like Arista that let them all talk to each other at the speed of light.
All right, but no deep dive would be complete if we didn't take a hard, clear-eyed look at the risks. Because for every massive boom, there's always the potential for a bust. And in this story, we might actually be staring down two very different ones.
In the old world of commercial real estate, there's something they call the wall of maturity. That number you see here, $1.8 trillion, that's the amount of commercial real estate debt, a lot of it written when interest rates were basically zero, that is all coming due by 2026. This is going to force property owners to refinance at today's much, much higher rates, a situation that could easily trigger a massive wave of defaults that ripples through the entire banking system.
Meanwhile, over in the shiny new AI world, there's a pretty big problem looming too. Just look at the numbers. There's this huge gap. Companies are spending over $400 billion every single year on AI infrastructure, but they're only generating about $100 billion in actual revenue from it. That raises a very serious question about whether the spending and the hype have gotten way, way out ahead of the actual value being created.
And that right there brings us to our final and most critical question. Is this great rotation a brilliant, necessary shift of capital from a dying industry to the next great economic frontier? Or are we just papering over the collapse of one massive bubble by furiously inflating a completely different one? The next few years are going to tell the whole story.